Give us a sense of what's different now that you've brought at least some of the traders back onto the floor. How is it making a difference? How is it going?
It's been a tremendous success, David. Thanks for having me on. We're excited to be able to not only bring traders back, which we started to do 4.5 weeks ago, but we've been able to continue to increase the number of people coming in because we've had such compliance with the rules and regulations that we've put in place. I'm able to talk to you without wearing a mask because I'm not on the actual trading floor. I'm over the trading floor using a remote cam. But on the trading floor, everyone's wearing a mask. Everyone's following the social distancing protocols. We put a number of protections in place, like installing plexiglass and other things, so that we can keep people safer and be able to scale up the number of people that are coming into the building. And importantly, we've seen it work. We've seen that we've been able to keep the community much safer. And I think that's a message for all of us across the U.S., across cities. When we reopen, we can do it responsibly, which will allow us to scale up and not have to go backwards.
And Stacey, can you keep going? I mean, absent a vaccine, how far can you go to bring it back to full strength, which you had before the pandemic?
Yes, we started with the businesses that were most impacted when we reopened. So the small independent floor brokers, which very often have less than 20 employees, were the largest portion of the first group to come back. Last week, we added on our market makers. They typically work for bigger firms. They're the ones that are responsible for overseeing trading in each of the companies that's listed on the New York Stock Exchange. They've been doing that remotely during the period that they were off the floor, and now they're able to do that live. We continue to scale up the number of people that are coming in, and assuming everyone continues to follow the protocols we put in place, as they have been, we'll be able to continue that path.
So Stacey, you're maybe ahead of a number of the large financial institutions down on Wall Street. What do you think that you've learned that they could benefit from as they look to start bringing their people back?
I think it's really important that everyone that's coming in understands that following the protections it's not about protecting yourself, it's about protecting others. They want to be back here and they want to be able to engage in their ordinary business each day and earn a living. And so to do that, we need to protect everybody else in the environment. That's why it's been successful. And I think it's important for all of those businesses to get that buy-in and support from the community as you scale up.
So as you bring people back on the floor, what are you able to do? What are you able to accomplish that you couldn't? I mean, you were up and running, goodness knows, the whole time, virtually, like all of us are now from our homes. But what did you give up by that virtual operation that you're getting back now with people being present?
Yeah, our model is unique in that we combine a market maker who has accountability with human judgment on the trading floor and sitting on top of very sophisticated technology. So we had two parts of that equation when the floor was closed. Market makers still had the same responsibilities that they have when the floor is fully open, and we're running on state-of-the-art technology, best in breed, but we lost that human judgment. And what we saw was that it cost investors something to not have that reduction in volatility that the human judgment also contributes to. It was an interesting experiment for us. I never would have chosen to engage in it and close the floor just to measure it, but we didn't quite know how much of our outperformance came from having a model that has a market maker versus having human judgment. And what we saw, and what a couple of academics have actually studied since we closed the floor, was that the outperformance comes from both. So we still outperformed other securities, but not to the same extent that we normally do when the floor is opened. So by reopening the floor, we get closer to our full service offering where we can dampen volatility, particularly at the end of the trading day when you start to see stocks move more rapidly. And that closing auction is the largest liquidity event in the world. On last Friday, we had a record closing auction at the New York Stock Exchange, which was 23% higher than our previous record from a couple of years ago. So we were getting that full force back on the floor and leading to better results for investors.
Stacey, even as the pandemics are going on, markets are evolving, and the New York Stock Exchange is evolving or attempting to evolve, specifically with respect to direct listings as a way to go public for a company's alternative to a traditional IPO. You had an application to the SEC. They didn't like it quite so much. You've come back with another one now. Give us a sense from your perspective where that stands right now.
Yeah, direct listings are a really interesting innovation in the capital market space. And while they aren't for everybody, we're hearing from both investors and issuers that they're looking for more choices. So we've been working with the SEC very productively on refining the offering of the direct listing. We've had two companies to date. So Barry McCarthy, who's the CFO of Spotify, came up with the idea, brought it to us. We rolled out the first one. Slack was the second company to choose that path for their public listing just over a year ago. And where we've been building on that model is to allow for capital raising. What the direct listing really does is it separates the timing, decouples capital raising from going public. So you can choose to go public, but not necessarily raise money at the same time. So the two to date have taken that path. Now what we're working on is, what if you want to raise money at the same time, but you'd like the exchange and the process of opening that morning to determine how that offering gets priced. So that's the phase that we're working on with the SEC now. We filed the first iteration back in December, and we work productively with them on questions that they have. So this most recent filing, which we submitted on Monday, answers mechanical questions around how that offering will actually be priced in the morning, how does it get entered into the market as an order, and what measures need to happen that morning to get that live in public. And we've been advancing that ball so that we continue to work with issuers and investors on having another alternative to the public markets.
So, Stacey, you're in the middle of this regulatory process, and none of us knows exactly how or when it will come out. But from your perspective at this point, is it really a mechanical issue the way you described it? Because that sounds like we have to work it through. It may take some time, but it's not a substantive issue that you will get there sooner or later.
Yeah, I think that's right. And that's how it worked with Spotify. It took us about a year and a half working with the SEC, the Division of Corporation Finance, very constructive feedback and dialogue, because their goal is to protect investors. And so they want to make sure that they are working with us to develop a process that achieves that goal. It took about a year and a half to get that done. We are working on this iteration, and they're not substantive issues. They're more about how does it actually come to market, how does it get priced, how do investors know what to expect that morning from a price level range perspective, and how do we know that all that interest gets satisfied? So they're really more mechanical issues that we've been working on. I do think that we'll see direct listings have the ability to raise capital at the same time of their listing in the not too distant future. And there are some companies that have been asking about it too, because they're interested in pursuing that path. It really just builds on new innovations. I mean, you've seen SPACs. I mean, I don't know how we've seen over this period of time that during COVID-19, when the markets have been very turbulent, you've seen a tremendous number of special purpose acquisition corporations, which are management teams raising money, IPOing, without having the business operations yet, but planning to go out and acquire a business. And I think the fact that we've seen so many SPACs come to market over the past few months is really indicative of the fact that there are opportunistic businesses out there. It's another way to come public, because at the time of that business combination, the combined entity is now a public company. So it's just one more path to public we've been working on.
Stacey, in success, if this all gets worked out properly, how much difference will it make in your business at the New York Stock Exchange? Do you anticipate more companies will go public, or if they go public, they'll be listed with the New York Stock Exchange? How material would it be for the New York Stock Exchange?
Well, first of all, I don't think direct listings are going to be the path for every company, but there are some companies that are considering it. We're the only one that's ever held one, right? The fact that we have human beings involved in the process on the trading floor, overseeing that price discovery process, puts us in a unique position to be able to make sure that things are flawlessly executed, not just at a time of IPO, but especially when you look at a direct listing. What we've seen in the direct listings to date is those opening auctions are much larger than the typical opening auction for an IPO. Both Spotify and Slack were in the top 5 size number of shares printed in their opening auction of all opening auctions in history, among a list with the largest IPOs of all time. Even though as companies, they were smaller than some of those companies. Really massive trades, because so much price discovery is happening. That's why price discovery is such a critical part of the direct listing process, and we're really uniquely positioned to accomplish that.
Stacey, you mentioned the turmoil, I think it's fair to say, in the economy generally, which has really caused the government, through monetary policy and fiscal policy, to inject an awful lot of money into the economy. Is it shifting the way corporations are raising their capital? Because let's face it, borrowing has become a lot cheaper. Do you think that this may, over the medium term at least, mean the corporations increasingly turn away from equity raises and into debt raises?
We saw a number of companies leveraging both equity and debt throughout the pandemic. Just in those weeks the floor was closed, we raised over $35 billion, or companies listed on the New York Stock Exchange raised over $35 billion during that period of time, using follow-on offerings, as well as capital raising in a more traditional IPO process. So I think you'll see that when there are tools out there, companies are going to take advantage of them. Many companies were raising money because their businesses were under pressure due to the pandemic, but others were shoring up their balance sheets for the future. And it's been a very active capital market season, as you know and you see, and I think we'll see that continue. Certainly in the IPO market.
Okay,
I mean, we have 5 deals expected to price tonight.